a night like no other. When members of the military tried to topple the Turkish government a year ago, small business owners in Istanbul also took a hit. Bakery owner Süleyman Sarı describes the coup attempt as an attack on his life and livelihood.
Unavoidably, our business was affected because we didn't expect to face the coup. People were shocked because there was no sign for the coup.
For many like Süleyman, who abandoned their businesses to protest in the streets, the memories of that deadly night in July are still fresh. 249 people lost their lives on the night of the failed coup attempt. And while the standoff just there on the Bosphorus Bridge was over by the time the sun came up, the emotional and economic impact lasted a lot longer. The events of July 15 depressed consumer and business confidence almost immediately. The Turkish lira fell 5% against the dollar and has since struggled to regain its strength. The weak lira failed to attract foreign visitors. Revenues from tourism, one of Turkey's biggest earners, fell 33% to $8 billion in the third quarter. And economic growth slowed from more than 6% in 2015 to 2.9% in 2016. But so far this year, Turkey's economy has been recovering fast. GDP was up almost 5% in the first quarter. Analysts were only expecting growth of 3%. Nurullah Gur, an economics and finance faculty member at Istanbul's Medipol University, says the growth was thanks to an upturn in public consumption and government spending.
Government is giving incentives to increase investment and easing access to credit for especially small and medium-sized enterprises. And also the government is giving tax credits, and also government is increasing its investment expenditures.
Government spending is up more than 9% over the past year. The increase has raised the budget deficit to $5 billion, its highest level in 7 years.
It's clear that no country can always grow with government support, and Turkish government is aware of that. But when it is needed, as in the case of Turkey, government has to step up and support the economy. So when investment expenditures start to increase, government will reduce its support and Turkish economy will continue its journey.
The World Bank expects economic growth in Turkey of close to 3% by the end of the year. So for the economy, a coup that was put down by dawn isn't stopping progress in the days ahead. Adefemi Akinsanya, TRT World, Istanbul.
So let's take a closer look at Turkey's economy now. Joining me from London is James Butterfill, Head of Research and Investment Strategy at ETF Securities. And here in the studio is financial columnist Taha Arvas. Taha, let me start with you. Welcome back to Money Talks.
Thank you. Nice to be back.
Before we get into the hard numbers, I mean, you're Turkish. You were here that night. We were here. We heard the gunshots, the jets. What are your recollections of that night?
It was a very interesting night. I mean, as everyone who lived through it went, obviously experienced. It was surreal almost. When I look back at footage, I remember I heard the call for everyone to go to the airport, and so I rushed to the airport. And I remember I took out as you do in these days, social media, and I went on Periscope, and I was kind of broadcasting live from the airport. And when I look back at the footage, I can't believe it. It was a major obstacle at that point, but Turkey got over it, and I think we're all better because of it.
So let's look ahead now. Where do you see Turkey's risks and opportunities in its economy?
I think there are a lot of opportunities. One of the ways we see this in the data is we're lucky in that globally there's economic uncertainty. So people are looking for places to park their money. Turkey has we're multi-year level highs for foreign participation in our stock market. The stock exchange is at multi-year highs, all-time highs. People are investing because we have rapid population growth, we have consumer confidence, numbers are up, and the economic game is a relative game, and relatively Turkey is doing a lot better than most of the world, and so we have money is coming into the country.
James, let me turn to you in London. Is that how you see the Turkish economy from where you stand?
Yeah, I think from an international investor's perspective, investors expressed their worries after the failed coup in the lira. So it's appreciated quite considerably. If you look at, say, Turkish equities for the full year, they were flat in dollar terms, but obviously up in Turkish lira terms by 20%. So you can understand what kind of impact it had. But certainly since the start of the year, I mean, they're up 35%. It's probably one of the best performing emerging markets year to date, and they've actually had the fiscal stimulus engaged that was implemented by the government has had a real positive impact on corporate earnings, which outstripped expectations by 15% over the last quarter, and are likely to do something similar this next quarter. But interestingly, valuations aren't challenging at this point. They're at 9.3 times price to earnings, and emerging markets are more expensive at 11 times. So despite that rally, there is potential.
And certainly cheaper than many developed market stocks as well. But let me pick up on that issue of the fiscal stimulus, though. A lot of foreign investors looking at that major fiscal stimulus as a potential long-term threat to the financial stability. Is that how you see it as well, or do you see it being contained?
There are a few worries. I mean, the fiscal stimulus has created a mini credit boom, and we started to see that reflected in inflation numbers, which are now close to double digit. And there is a worry that inflation could now run out of control. And so that's one thing I think investors are quite wary of.
Okay, Taha, let me put that to you, the fiscal issues. What should the government be doing at this stage to bring that under control?
I think the steps that the government is taking were very important to bring businesses back, to bring, as you may recall, I mean, it's a major, having a coup in a country is a major blow. I mean, in the UK, the economy, Brexit, and the prime minister's changed, well, was about to change, all this stuff happened, and you can look, you see what the major effects to the pound sterling that had. You know, it's at, relative to the dollar, it's so much lower than it was. But I think what's important here is that the government step in and help businesses that were struggling to get credit, and that's what they did. As you know, there's a $100 billion plus credit guarantee facility available, and a lot of companies have participated in this. And a lot of foreign companies that are here are helping give loans to those companies that need it with these guarantees.
We're running out of time, but very quickly before we go, first to you, James, in London. What's your end-of-year forecast for GDP growth for Turkey?
Economists have a sense of humour. If you have a decimal place in a GDP forecast, then that's not really all that accurate. We don't tend to see it like that. We just see there will be further growth. There are some volatile security problems and potential inflation problem, but we think it will be under control. So
I'm going to leave it there. Taha, what's your forecast?
I'll take my lead from James there and not give a specific number, but I think we're going gangbusters. And just quickly, the CDS numbers, credit default swap numbers, are showing that Turkey's at an all-time low for risks relative to other countries, so I think we'll do well.
Taha Arvas and James Butterfill in London, thank you both ever so much for joining us on Money Talks today.